Bitcoin bulls have been validated in the past week as Bitcoin surged past $50,000 and reached 55,000 US. The latest rise from Bitcoin is the largest and steepest since its ascent to the record high of $64,000 in April this year. If you've ever wondered what people mean when they describe digital currencies as volatile, you only need to look at Bitcoin's price graph for this year. If we take the year-to-date growth, Bitcoin has enjoyed almost a 90% return in 2021. But the journey it has taken to get to that point tells a less enjoyable story. The first 10 days of the year saw a $10,000 rise, a pattern which repeated itself a few times throughout the first half of the year. Bitcoin's latest surge is approximately the same pattern. So throughout 2021, the $10K jump has immediately been followed by a drop equal to its rise. Now, how big will the next correction be? This is the question Bitcoin investors should be asking themselves because, as we have seen, it's not a question of if, it's a matter of when and by how much. The latest surge, which began 7 days ago, is part of a larger bull run that began on July 20. This furthermore means it is the second largest bull run in Bitcoin's history, the biggest being from January 1st, from just below $30,000 up until April 14, when Bitcoin hit the record high of 64,000 US. Although it is impossible to pinpoint the reasons for Bitcoin's massive drop earlier this year, there are a couple of events which, coincidentally or not, immediately preceded it. One of those events was the Chinese government's attempt in April to tighten the reins on digital currency in China. Since then, China's resolve to stamp out cryptocurrency has only become stronger and more definitive. The other major event that preceded Bitcoin's severe mid-year dive was concerns over Bitcoin mining and its increasingly harmful impact on the environment. This was brought to the forefront by Tesla founder Elon Musk when he announced that Tesla had cut ties with Bitcoin and was no longer accepting the digital currency as payment for their vehicles. Not much has changed since in regards to Bitcoin mining, except for the fact that the public now knows things such as the electricity Bitcoin miners use on an annual basis is equal to that of Egypt and is also 0.5% of the world's annual electricity usage. While it is debatable that these two things were the major contributors to Bitcoin's mid-year meltdown, it can be argued that a mass sell-offs began creating a domino effect which eventually saw Bitcoin lose half of its value. This happens all the time in the crypto market, albeit usually on a much smaller and less devastating scale. So what's different this time around? What the aftermath of Bitcoin's mid-year crisis did do was it fueled discussion. After a crushing blow like that, an asset can either crumble or rebuild. Bitcoin has done the latter. Last Friday, US Federal Reserve Chairman Jerome Powell made a startlingly bold declaration, telling Congress that the central bank had no intention of following in China's footsteps by banning cryptocurrencies. These words were reinforced on Tuesday when US Securities and Exchange Commission Chairman Gary Gensler reiterated this in a financial hearing, saying that he has no plans to outlaw digital currencies. It's things like this that cement Bitcoin as a legitimate form of asset. But every time a major figure publicly supports Bitcoin, or every time a country decides to adopt it as legal tender, these actions help to promote the currency even more. The difference between today and April this year, when Bitcoin lost half of its value, is that Bitcoin is now stronger and closer to legitimacy and being considered a part of the mainstream financial system. Although it is never easy to predict what is around the corner in the crypto space, these appear to be good days for Bitcoin.